Welcome to this week's Crypto Roundup. In today's recap, the SEC has dismissed multiple crypto investigations, marking a significant regulatory shift while its crypto task force reviews the Howey Test amid ongoing industry discussions. OKX settles DOJ charges, paying over $500 million in penalties, and the Ethereum Foundation sees a leadership shakeup as Miyaguchi steps down as executive director. Meanwhile, Solana futures ETFs appear on the DTCC list, fueling speculation of a spot ETF approval, and FTX's token surges after Sam Bankman-Fried posts from prison as its bankruptcy costs approach $1 billion. OX.FUN faces insolvency concerns, while Pump.Fun reportedly tests its own AMM, threatening Raydium's market share. Lastly, Bank of America signals readiness to launch its own stablecoin, pending legislative approval. Thanks for tuning in to the weekly news recap. Let's begin. SEC dismisses multiple crypto investigations. The U.S. Securities and Exchange Commission, SEC, has dismissed multiple enforcement actions against major cryptocurrency firms, signaling a significant shift in its approach. Over the past week, the regulator has formally closed cases involving Coinbase, Uniswap, Robinhood Crypto, OpenSea, Gemini, and agreed to pause the investigation into Justin Sun's companies. The dismissals began with Coinbase, which announced that the SEC would drop its lawsuit against the company. The lawsuit, originally filed in June 2023, accused Coinbase of operating as an unregistered securities exchange. Under the agreement, Coinbase will not pay any fines or modify its business practices. The case is set to be dismissed with prejudice, ensuring that it cannot be refiled. The final decision now rests with a vote by SEC Commissioners Mark Uyeda, Hester Pierce, and Caroline Crenshaw. Coinbase Chief Legal Officer Paul Grewal described the decision as a necessary correction, stating, "They sued us without any basis in law. They sued us without telling us what the rules were." Grewal also noted that the SEC's approach had imposed significant legal and financial burdens on the industry, calling it a tax on American innovation. Following this decision, the SEC also ended its investigation into Uniswap. The decentralized exchange had been under scrutiny after receiving a Wells notice last year indicating that enforcement action was being considered. Uniswap confirmed in a statement that the SEC had officially closed the case with no further action, allowing the platform to continue its operations without changes. The SEC also dropped its investigation into Robinhood Crypto, closing the case without pursuing any charges. The inquiry focused on whether Robinhood's crypto trading services constituted unregistered securities offerings. Robinhood's chief legal officer, Dan Gallagher, strongly criticized the SEC's decision to investigate in the first place, stating, "Let me be crystal clear, this investigation never should have been opened." Another major case dismissed by the SEC involved major NFT marketplace OpenSea. The platform had been under investigation over allegations that it was operating as an unregistered securities exchange. OpenSea CEO Devin Finzer welcomed the decision, emphasizing that classifying NFTs as securities would have created legal uncertainties and hindered innovation. On Wednesday, the SEC also closed its case against Gemini, the cryptocurrency exchange co-founded by Cameron and Tyler Winklevoss. Cameron Winklevoss strongly criticized the agency's handling of the matter. He stated that the prolonged legal battle had cost the company tens of millions of dollars in legal fees and hundreds of millions in lost business opportunities. Winklevoss also argued that the SEC's actions had caused widespread financial damage to the broader industry. In addition to these dismissals, the SEC has requested a 60-day pause in its lawsuit against Justin Sun and his affiliated companies, which include the Tron Foundation and BitTorrent. The lawsuit, filed in March 2023, accused Sun of selling unregistered securities and engaging in manipulative trading practices. The SEC and Sun jointly requested the pause to allow time for settlement discussions, but the outcome remains uncertain. SEC Task Force considers Howey Test revisions. Following the series of dismissed crypto cases, the SEC's Crypto Task Force is now reviewing whether securities laws have been misapplied to digital assets. Unchained reported. A group of lawyers argued before the task force that the SEC has wrongly expanded its jurisdiction under former Chairman Gary Gensler, using the Howey Test to regulate staking, airdrops, and NFTs. The task force, launched last month by Acting Chair Mark Ueda and led by Commissioner Hester Peirce, is also assessing whether the agency should narrow its definition of brokers and dealers. Lawyer J.W. Verrett said the SEC's enforcement tactics had created regulatory confusion, stating, "These reforms help the SEC undo the Gordian knot." OKX settles DOJ charges. Not all crypto companies got good news this week. Amid a broader shift in U.S. crypto enforcement, crypto exchange OKX settled with the U.S. Department of Justice over allegations that it operated as an unlicensed money transmitter and facilitated illicit transactions. The settlement, announced Monday, requires OX.FUN's fintech company Limited, an OKX affiliate, to pay more than $500 million, including $84 million in penalties and $421 million in forfeited fees earned from U.S. customers. According to DOJ, acting U.S. Attorney Matthew Podolsky, OKX enabled over $5 billion in suspicious transactions and criminal proceeds. The agency also alleged that an OKX employee instructed U.S. users to bypass restrictions by entering false information, stating, "Just put a random country and it should go through." Ethereum Foundation director steps down. The Ethereum Foundation is undergoing a major leadership shakeup as Aya Miyaguchi, its executive director since 2018, announced she is stepping down from the role. Miyaguchi will transition to a newly created position as Foundation President, where she will focus on institutional partnerships and Ethereum's cultural vision, she shared in a blog post on Tuesday. Her departure comes as Ethereum faces growing competition from rival blockchains like Solana and mounting criticism over its technical roadmap, marketing strategy, and lack of DeFi support. Some community members had been calling for leadership changes, pointing to Ethereum's lagging token performance compared to Bitcoin and Solana. Ethereum co-founder Vitalik Buterin will personally select Miyaguchi's replacement, though no successor has been named yet. Some Ethereum supporters remain skeptical of the move, with former core developer Eric Connor posting, "No one knows what president is. No one knows the new leadership structure." Solana futures ETFs appear on DTCC list, raising hopes for spot approval. The Depository Trust and Clearing Corporation has listed 2 Solana futures exchange-traded funds from Volatility Shares, marking the first Solana-based ETFs to appear on its fund list, the block reported Wednesday. The 2 funds, Volatility Shares Solana ETF and Volatility Shares 2X Solana ETF, aim to provide exposure to Solana futures contracts. While a third proposed 1X leveraged ETF was initially filed, it did not appear on DTCC's list. This development could improve the odds of a spot Solana ETF approval. Earlier this month, the SEC acknowledged spot Solana ETF filings from multiple issuers, including 21 Shares, Bitwise, Canary, and VanEck. While DTCC listing does not guarantee immediate trading, past cases, such as VanEck's spot Ethereum ETF, suggest that approval could follow within months. FTX token surges after Sam Bankman-Fried posts from prison. FTX's native token FTT briefly spiked 40% on Monday after a series of tweets were posted from Sam Bankman-Fried's X account, his first online activity in 2 years. Bankman-Fried, the former CEO of FTX, is currently serving a 25-year sentence for fraud and conspiracy at the Metropolitan Detention Center in Brooklyn. The tweets, which referenced government layoffs and corporate firings, were posted as Elon Musk's Federal Workforce Efficiency Directive made headlines. Bankman-Fried's account stated, "I have a lot of sympathy for government employees. I, too, have not checked my email for the past few days." FTT quickly jumped to 2.12 before falling below 180 within 30 minutes. While Bankman-Fried does not have direct access to social media, he can communicate through core links, a prison messaging system. It remains unclear who posted the tweets, but they have reignited speculation around his influence on crypto markets. In related news, the FTX bankruptcy is on track to become one of the most expensive in U.S. history, with legal and advisory fees reaching $948 million, according to court records reviewed by Bloomberg. Law firm Sullivan & Cromwell has received $248.6 million, while Alvarez & Marsal, a financial consulting firm, has collected $306 million. The total cost still pales in comparison to Lehman Brothers' 2008 bankruptcy, which exceeded $6 billion but remains staggering for an exchange that held between $10 billion and $50 billion in assets at the time of its collapse. OX.FUN faces insolvency fears. OX.FUN, the crypto exchange launched by Three Arrows Capital founders Suju and Kyle Davies, is nearing insolvency, with liquid assets dwindling to just $1.7 million according to on-chain data reviewed by Coinbase head of product Connor Grogan. If pending 1 million USDC withdrawal requests are processed, the exchange's stablecoin reserves could drop to roughly $1,000. The liquidity crisis follows accusations from Jeff Adao, an artist collective, that OX.FUN attempted to extort $1 million from them by conditioning fund returns on positive social media promotion. OX.FUN denies the allegations, instead claiming that Jeff Adao engaged in an Oracle manipulation attack involving Jailstool, a meme coin linked to Barstool Sports founder Dave Portnoy. Despite the concerns, OX.FUN's pseudonymous head of treasury insists the exchange is not insolvent, but has paused large withdrawals due to market volatility. Pump.Fun reportedly testing AMM, threatening Raydium's market share. Pump.Fun, the popular Solana-based meme coin launchpad, appears to be developing its own automated market maker, potentially disrupting Raydium, the largest AMM on the blockchain. The discovery was first reported by on-chain analyst @TrenchDiver, who shared a link to a Pump.Fun branded AMM interface currently in beta. If confirmed, this move would bypass Raydium's liquidity pools, where Pump.Fun tokens currently migrate after reaching a certain trading threshold. By keeping trading within its own ecosystem, Pump.Fun could capture more fees and expand its revenue model, which has already generated over $500 million in fees since early 2024. Speculation around the AMM launch sent Raydium's Ray token down 25% on Monday, as investors worried about the potential loss of trading volume. Pump.Fun has not officially commented on the development, but blockchain data shows it has already tested liquidity pools with a trial token called Snowfall. Bank of America signals readiness to launch stablecoin. Bank of America CEO Brian Moynihan said that the bank is prepared to launch its own US dollar-backed stablecoin if Congress legalizes it. Speaking at the Economic Club of Washington, D.C. on Tuesday, Moynihan stated, "If they make that legal, we will go into that business." This comes as Congress pushes to pass stablecoin legislation within the first 100 days of the Trump administration. Lawmakers, along with White House crypto and AI czar David Sachs, have indicated bipartisan support for regulatory clarity in the sector. Moynihan compared stablecoins to money market funds and bank accounts, emphasizing that legal approval would allow Bank of America to treat them similarly to foreign currencies. And that's all. Thanks so much for joining us today. If you enjoyed this recap, go to unchainedcrypto.com newsletter, that is unchainedcrypto.com newsletter, and sign up for our free newsletter so that you can stay up to date with the latest in crypto. Unchained is produced by Laura Shin with help from Matt Pilchard, Juan Aranovich, Megan Gavis, Pam Majumdar, and Margaret Correa. The weekly recap was written by Juan Aranovich and edited by Stephen Ehrlich. Thanks for listening!